Here to help the investment pros, Jim Frischling, president of NewOak Capital, Hillary Kramer. Here's the thing, though, Jim. For the last couple of years, we've been waiting for the great rotation the other way, out of bonds and into equities. When the heck is that going to happen?
I don't think it's going to happen in 2015.
Really?
Well, given what's going on with rates, the fact is bonds are going to continue to hold their ground. They're not going to give up because I think the central banks globally are going to keep rates fairly low. I think the U.S.-centric companies and U.S. markets continue to be a very good place to be. I think we're seeing dividend players continue to get more traction. I mean, we're talking about attractive dividend, solid dividend players, because they're almost a proxy, or rather an alternative for the lack of yield in bond land.
Well, I think.
But here's the thing, Jim. Why did Main Street become so afraid? I mean, the narrative was, we have so much more money in our pocket, we're going to go out and spend it. Savings went through the roof. What are people afraid of?
Well, I think on the savings from gas, I think I even jumped the gun a little bit. I think there's a little bit of a lag there. I think people have to get used to it. And the volatility in energy is still pretty high. So I actually think it was worse for the economy that oil fell the way it did. That's why we're bouncing now. But in terms of jobs, in terms of wages are going up. It's starting going up in the professional space, certainly with their technical skills. But I'm telling you, I touch a lot of different businesses. There's wage pressure, which is a good thing as long as your top line is growing. I feel wage pressure across these businesses, and I think you're going to start seeing it not as fast as people want, but wages are going to go higher.
Listen, first of all, wages have come down so dramatically. It's been one of the more curious and disappointing things about this so-called recovery. This is what makes it the worst post-recession recovery in history. I'm with Jim. I do see wages coming on. I see pent-up demand.
You're going to fake it till you make it.
I thought I made it.
No, in terms of big tech companies, these guys are cash rich, and it's really hard to pinpoint exactly the next great thing. So to a certain extent, while I agree they should be investing wisely, I think the Googles and the Facebooks and stuff are trying to take advantage of their size. I think what what Facebook has done with Instagram is a great example. Google's got this Google X going now, which is for small teams. And yes, while they're spending on everything, the fact is they're giving people a chance to find that next niche, and if they like it, they go forward with it. If they don't like it, they pull the rug. So these guys are putting a lot of cash.
So you think it's okay as a discovery process?
I think given their prowess in the market, their size, I think that's what they have to play right now. Then again, maybe we're going to talk about Yahoo later, about maybe they've made some wrong investments. But I think Google and Facebook are in a steep competition
Although
right
the
now.
Alibaba thing saved them, right? A Yahoo would be a $4 stock. Well. All of the stuff they talk about, it captures the public's imagination. But last year, the public really became more demanding, at least the investment public, on these names, demanding that you bring more to the bottom line. So let's talk about winners in this space. I like almost all these names if someone owns them. The only one I'm a little worried about right now is Google, Jim.
Yeah, no, and I mentioned Google. I understand that, but I still like what they're doing. When being asked to make a pick, I went a little contrarian because I went with Qualcomm. They actually took a 10.
It was up a couple bucks today.
Yes, it was. But
what was the news today?
They took. I just think they were oversold. A 10% hit. I mean, they got a 2.7% dividend. I talked about dividends earlier. They got $31 billion in cash, and I think they took a particular hit because Intel is creeping up on their tails in the mobile capacity. Fact is, Intel is discounting everything they can to get into that market. I still think Qualcomm's the biggest player in the chip space, and I'm sticking with them.
Yeah, I just want to say on Qualcomm, I really agree. It took Qualcomm over a year. It took Qualcomm over a year to come back from being sued in China, which is a good lesson of what can happen if you get too big in China. As the price of oil drops, of course, no one wants to buy the solar companies, and so you have an opportunity now.
But you're on the other end of that, though. You're kind of worried about that.
Yeah, not without it doesn't work without the incentives, without the subsidies, and as the price of oil comes down, it makes them even more challenged. So without the government's help, these guys are losers.
All right.
I'm not sure if it's a Pete Carroll, but I went with Marissa Meyer of Yahoo because while I think the decision about Alibaba is the right and the best call for the shareholder, I think it's a decision that might leave people wondering if there's no value left in Yahoo, why do we want Marissa Meyer at the head of the company? So I think going forward, you pull a Marissa Meyer, it might be selling your best asset and leaving yourself without a job.
Without a doubt, it's a 2-minute warning for her. I mean, she better figure it out because this is a 2-minute warning. I think Wall Street wants to see something right now. What do you think? People love him. Investors love him. Despite the volatility of his name, a lot of people haven't bailed out. In fact, every time it goes down, he does find buyers.
Oh, and look, I think he's done some very smart things. Multiple countries, he taps multiple markets for products. And one of my favorite things I started looking at the company was what Matt highlighted was, they've made so many strategic investments. You want to talk about R&D?
It's like an incubator.
It's like an incubator. Yeah. And again, it's only going to take one. So yes, high volatility. But I think I really like what they're doing.
Darren, you're going to weigh in on that really heavily tomorrow from a financial angle as as well. What are you looking at for this week?
I'm glad you said for now in terms of oil, because I still think we're going to be in a volatile period. And just because we had an
retest
update,
the bottom,
I think we're going to retest, and this battle with the Saudis and the other players doesn't end. To Matt's point, it is about earnings, and then we have a big earnings week, and we finish the week with non-farm payrolls, which I think is at least going to be a feeder of the direction. Although I'm expecting a pretty good number, and then a little bit on the wage growth, but not so much.
Good news. We're rooting for good news, right? Good news will move the market. Good news is good news there.
Good news should be good news.
Good news. And what is good news on the jobs front?
225, 240. I'll say.
I'm going to say we better get 250 more. All right, guys.